You guys definitely drove together, right? Yeah?
Sure did.
Okay.
I can guarantee you both
Not the
of us
motorcycle.
had phone. Ooh, that would have been cool. But you
We
had
sat
phone stuck in your.
silence.
You guys were
I'm
talking.
in like motorcycle purgatory with trying to get stuff, a couple things fixed. So it was-
Good Friday morning, guys. My name is Jerry Miller, and thank you kindly for
supposed to be
joining
quiet.
us on Real Talk with Keith Smith. It's a pleasure to connect with you guys through the I Love CVille Network on a show that is 8 years strong. Is that right?
We're this April will be ending our 8th year and beginning our 9th year.
So 8.5 years strong, ladies and gentlemen.
Assuming I don't get fired.
Real
between
Talk
now
with Keith
and
Smith.
then.
You won't. You do a hell of a job. We talk anything and everything.
Oh, I was talking about Yonna.
Real estate,
Talking about you.
life, and the pursuit of happiness through prudent financial decision making. Today's panel, I think, embodies that tagline. In fact, that is the tagline of, in a lot of ways, of Real Talk. Maybe Keith in Real Talk will embody that. Scott Morris is here. Tovah Payne is here. Keith Smith is our star. Judah Wickower is the Elmer's glue.
Amen.
We don't get to Victory Lane without Judah Wickower. And it's a show that's live on 27 social media and podcasting platforms as we speak. And we encourage you, the viewer and listener, to shape the show. So Judah, without further ado, if you could, my friend, go to the studio camera and a 4-shot where all of us will be on camera with, I think, just a fantastic panel on a Friday morning.
You know, I've been looking forward to this, particularly, we were talking, I guess before the mics were hot, about each one of us are married to our business partners, right? And we work together. So at some point, we're going to talk about that fun and how that actually works, and is it a good thing? Is it a bad thing? But let's take a few seconds for the few people that don't know each one. I'll start with you, Scott. Introduce yourself, and then Tovah, and then we'll dive right in.
I'm Scott Morris. I grew up in Central Virginia. Been in the mortgage business for 10 years now, and we've got a blended family. We've got a couple kids. We're multiple states.
And
We're running.
and a
We're
couple of
running.
motorcycles.
And
So
a
I
couple-
got to
yeah,
throw that
yeah,
in, right?
Yeah, I like the
And
rest.
soon to be a boat.
And
Soon-
Wow, that's a lot of
and the
toys.
boat project.
We are negotiating a boat side and I on
Okay.
the side.
Yeah.
Yeah.
It's a never-ending project.
It is a never-ending project.
I'm Tovah Payne. I'm his wife. I am also the boss. I run the show.
I love it. I love it.
Well, I think that's the short answer to each one of our business relationships. Is I asked Yonna this morning. I said, "Hey, do you want to come on?" She's actually out doing business right now, but she passed on it. So what I want to do is just do a quick kickoff. Right, we're at the end of August, first 8 months. Right, we do a lot of data on the show. What is the car footprint looking like? And Judah's got about 6 slides over there to take a look at it. We'll buzz through it pretty quickly, and then maybe you two guys can chime in on what you think, and then we'll kind of move into the important topic of marriage and working together. So, Judah, if you don't mind hitting slide number 1, please. We'll kind of go through this kind of quickly. I put them on my Facebook page, but we're comparing in that slide the first 8 months of this year versus 25 versus 26. So it's interesting if you take a look at it at a larger swath, this 8-month swath, we're up about 6% in sales, volume in sales, number of sales. And Jerry and I have been doing this like every month now. At the end of the month, we're saying like, what's the first 4 months, 3 months, 5 months? That 6 months, that 6%, has been holding pretty solid. Sales volume also is increasing. That's the total number of sales transactions that are coming out, about 5% on it. But the median sales price has been flat, in other words, compared 25 to 26. And that's been, every time Jerry and I have been doing this, that has been something a little consistent. The median days on market has gone up. So the market hasn't slowed down from a volume perspective. And a little later, we're going to take a look at August, because our conversation you and I had yesterday made me want to look at this a little harder. Like, what is August looking like? And then I did a 20-year analysis. Was up until 3 o'clock in the morning, taking a look at it. So jump in on slide 1. I mean, do you guys Is this what you're seeing out in your marketplace?
Yeah, I mean, so the footprint, we've seen some higher year-over-year sales. Specific to the August comment, excluding last year, the previous 5 years, August has been one of the bigger months we've had all year, which means that's July contract activity.
Got it.
And this year and last year, that's a little softer, but we've seen bigger Septembers afterwards. So I don't know if that's just like some shift in seasonality with like school year stuff, or if there's anything, or if there is, anything specifically driving it. But just year over year, that's what we've seen.
So, Tovah, want to jump in?
No, I mean, I agree with that. But I do think I'm a firm believer that not only schools starting either earlier, or some of them are actually starting later, like everything is staggered. Like I have had friends who have had kids start their school years within weeks of each other. So we started at the beginning of August. I've had people start the second week of August, third, fourth. So it's like there's no real like uniform schedule for schooling, and I think that is really throwing a lot of people off.
You know what's interesting is this came up yesterday in a call. We're helping broker a deal in the pool industry. He's a service provider of swimming pools, and because the school season is getting out earlier at the end of the year, and then starting earlier at the end of August, that window is shrunk
Yeah.
because it's still colder, the water temperature wise, when they get out. And it's not going, I mean, when we were growing up, we used to go to school in first week of September. So the season was going through August. August is hot as you know what, and that was still the season. He's saying this is throwing off his business completely.
Yeah.
So maybe there is something to this changing schedule. And this is the second year now that Albemarle County and Charlottesville City Schools are on the same school schedule. Before they were staggered schedules, the private schools also matched up with the public school schedules as well. So Central Virginia, Albemarle, Charlottesville, and the private schools all on the same start and stop schedule now.
So we'll jump right to slide 7, if you don't mind. So that's the last one in the stack I gave you. So I took a look at 20 years going back. Now, these are closed deals, right? So you're talking about pipeline. These are deals that, started in July, but these are just what is July and August looking like in sales going all the way through. And, generally, August slows down about 70% of versus sales. They're usually a little bit long on market, right? The median home price is kind of staying stable. But what I found the most interesting, and we'll go back and look at a different August slide, this August versus from July to August, there was a huge drop. This July 2026 to August 2026, that we'll talk about it in a minute, but our conversation yesterday got my wheels turning going, well, hold it. I'm hearing tempo the last 2 weeks dropping, right? I'm hearing, the school conversation coming into it is doing it. There's also a component, which I'd love to get your guys' read on it. A lot of phone calls we're having, because the buyer profile's my age. My buyer's taking a time out now, take kids to college, right? Or take grandkids to school. So it's an interesting hiccup. I think this is seasonal, looking at the last 20 years. And I think when we do this show at the end of September, we're going to see a 180 going back. What do you guys think?
I mean, I agree. I think that there has, I talked kind of briefly, we were chatting about yesterday, is we've seen a softening over the last 2 or 3 weeks. And I think it's a seasonality thing that whether it's just a difference in school schedules or kids off to college, whatever it is, that's been going on, and that we typically see a bit of a pop 2 weeks out from now.
So Jude, on slide 6, if you guys wouldn't mind, slide 6. So this is this July, August thing I'm talking about. So these are just closed deals, right? Comparing July to August, right? We were down 34% in volume of sales. Last year, we had, July of this year, there was 294 closing. These are closed deals in the month of July. So far, in the month of August, and we do have a couple days left, we're at 193. That is 101 units less than we were closing in July. That's roughly 34% off just compared to the last month. Prices are staying flat for the most part. The average is down a little bit, which has been kind of normal, been tracking this month. But that number surprised me. Do you guys?
30%, yeah.
That's a huge number.
Yeah.
Slide 5. Go ahead.
I agree. Like, I see it in our closings. Like, we had a great July, and we're probably 30% lighter in August.
We're going to do one more slide, then we'll kind of talk about what this all means. Number 5, if you don't mind, real quick. So this is August of last year versus August of this year. Closed deals, we're down about 13%. So we're roughly 15% below the same volume of sales as we were last year. The only difference is last year the median price was up 11%. So this year numbers are pretty much on the median, staying flat. And you guys are experts. What does this all mean to you guys when you're sitting down talking to a client?
I've seen buyer, but I was on a call yesterday, the day before, like with some like national leaders, and overall application tracking is down, especially over the last 2 or 3 weeks. I think that I don't know how much it's rate impacted or just an overall consumer sentiment that's driving part of it, or just a seasonality shift that we're starting to see. I don't know that there's anything greater to it. We've been in the same rate range for some time, so buyers are much more accustomed to hearing with where we're at. I think that you do have to look at 2008 to 2022 as an anomaly that we may not go back to, and the further we get away from that, I think the less rate impact actually exists. There's certainly a cost of living burden that everyone is facing. I do think that we've probably, assuming that we are not going to, there doesn't seem to be anything driving rates back down in the short term. We've probably topped out on pricing, and we're starting to see that in these numbers. Because even though with a limited amount of inventory, and we may see continued growth in certain sectors, Charlottesville and parts of Albemarle County will be driven by a higher income earner that is being put into the area with the thing going on in green with Pfizer, whoever's AstraZeneca, the data science center at UVA. Those are all higher income jobs. They'll be competing for a limited amount of housing in the area, so you will see some continued growth in price there. However, when you move into the more rural parts of the area and state or region in general, you're going to continue to see somewhat of a plateau or softening in prices if there's not continued population growth there to overtake the existing inventory, and rates do not substantially come down, which I don't think that there's a mechanism in place for. You're going to see a softening in value.
So you are projecting values to decrease
nationally, or regionally and nationally.
I was playing squash yesterday with a fairly prominent realtor, and he said that we was talking about investment properties that he owned and whether he should unload them or not. And I asked him about appreciation, and this gentleman said that he does not expect value appreciation to be significant over the next 2 to 3 years. And he said, I think it's going to be flat, what we're going to see in the car footprint.
0 to 6. Micro markets will matter, right? Price points will matter, but it will be between 0 to 6. And I really love to have Tovah's read on this, but I'm going to ask for it a little bit differently, because you're kind of, you're on the front end and the back end, but you kind of help people along through the process, right? So you really get granular with your clients. How is the mood? How is the tenor? Are deals more harder to get or difficult to get across? Is stuff popping up? because I want to talk about something that popped up on me yesterday that we're not normally seeing that's making transactions a little bit more difficult.
So I can tell you something that has not happened to me is in a personal deal that I've actually been working with these people for 1 year, almost 2 years. The one that bought your land.
Oh, gotcha.
Yeah, almost 2 years. They were building, totally custom house, great house. The pre-build appraisal came in higher than what now the finished value appraisal is coming in at. So that's a first, and I think that that is probably going to continue to happen. Not where we're going to see that substantial of a drop between two appraisals, but I think that we're not going to see it, like it's going to be harder for people to say, or for sellers to be like, well, this is, what I wanted to list my house for, so that's what we're going to go for. And they're not going, if it's not priced right, they're not going to get an appraisal that is going to.
Is this buyer, obviously they're financing it, but
Yeah,
have they sold?
so it'll still be fine. It'll still
But
be
have they
fine.
sold their existing property?
No.
Right, so they're waiting for house A to get, or B to get finished.
They have a very unique situation.
Got it, got it. So I think it would be important.
So in the period of time of them building this house, I'm just trying to understand, in the period of time of your clients building this house, which is, say, what, 8 to 9 months?
It's been longer than that.
Okay, so it's been longer than that. The appraisal at shovel into the ground was higher than, here's the keys to your
Yes.
house?
But how much
Dang.
longer,
Because
how
of
much
the
longer was
sales.
that? Because that's an
It's-
important.
Yes, so it was because we had more sales to back what their construction value was than we do now.
So for those who may not know the granular of this, talk a little bit how this loan process works, right? So you're talking about a construction perm, right? Right, so walk me through that, right?
So typically with the construction process, this one is kind of an outlier again, but with that process, you usually have a construction appraisal to kind of give the construction company, or not the construction company, but the person who's handling the construction loan. They'll have an idea of, okay, we are comfortable with lending this amount of money to these people because we know it's going to appraise for this, so we know that they'll be able to get financing. And then they take that and they lend on that number, and then I do a takeout loan at the end. But then at the end, we still have to make sure that the value still exists. That's usually within a 6 to 12 month time frame. Usually the value still exists, and usually we end up with a higher value.
upticks.
Right.
Yeah.
But because of just where the market is right now, because we're not seeing as many sales, because housing or house values are kind of staying stagnant right now.
How custom is this?
It's completely custom.
Yeah, so that
It's
we need
also
to point that
yes.
out, right?
Yes.
Because
We're also not in your $700,000 range.
No,
We're in
yes,
the,
this is-
this has got
yeah.
M's.
Which
yeah,
is
sure,
another-
sure. But the struggle is the comps, and time
Yes.
matters on this,
Yes.
right? If it was more than 12 or 24 months ago when there was, pretty high appreciation, right? It goes into it. But from a normal path is, you do a construction loan, you do an appraisal on a set of plans. To your point, it usually goes up because stuff is added to it, yada, yada, yada. This is going down because there's no comps to go against it, right? So it's not that the market has dropped that much. I think it may be specific to that property. The market is slowed down without
Yes.
a doubt. But I think it's just important to understand we're talking apples and apples.
Well,
and
yes,
pears.
I think it also depends on where your purchase price, or it does depend. I don't think it does. It does. It 1000% depends on what price point you're actually looking to buy at, because there are going to be, like, as I think in our specific area in Culpeper, I do think that the higher you go, the stickier it's going to be, because there's not enough houses for sale in that price point. Like, we are closer to the lower end, like, we're not Charlottesville. Culpeper is not Charlottesville, so we're closer to probably mid 300 to 6. Like, that's kind of where you'll have a lot of comparable sales. Anything above that, I think you're
Or
gonna have a hard
below it.
time. Yeah, well, below, I still feel like you're probably okay, because you've still got some comps that you can support the value
I
with.
just put on a resale for the land trust It's a $350,000 appraised home for $265, and we're having struggles getting
Really?
people in. Well, it's a program, right? They have to qualify, right, for all that kind of great stuff. But the struggle is the people, and this is a whole thing. I'll get off on a tangent on here. The problem is the 80% AMI, right? They don't, at $76,000 for a household or $85,000 for a household, they just can't get the math to math
Right.
for 265.
Which is why we don't do USDA loans anymore. And it's it's tangible in some areas like surrounding Huntington, West Virginia, where your average price point is still $200,000, and you've got a university that's supporting incomes that are average in the mean, to where they can earn inside of the county loan limit and still qualify to buy a $250,000 house. A 3.2, 1,700 square foot 3.2, which here is in the $400,000 to $700,000 range, depending on whether it's in a Greenbrier neighborhood or or Culpeper.
I think because even though I'm formally off the board, the land trust board, I got called in to look at a couple of things on it, and it's very interesting because people, and this is just to Jerry's point and the conversation he had, the appreciation model has changed, right? Particularly for 3 or 4 years. So people that bought land trust homes 3 or 4 years ago have double-digit appreciation. People that bought last 3 or 4 years, it's pretty flat, right?
Isn't there a clause there that prevents them from flipping that appreciation? Like the purpose of the whole project is to keep them in the home. Like that's why it exists, not to let them go in and buy the home and then take advantage of
it.
Well,
let me paint this. Yes, there's a resale formula in it. But let me paint a different perspective, right? I just sat down with two guys and bought. What's the median price house right now? Let's say it's $505,000, right? According to the data that I just pulled. I'm buying a house for $505,000. I'm doing a 10% down. I'm bringing 50 grand to it. Blah 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 blah. I got to be in that house probably right now for about 5 years in order to start going on the positive side. Is that a fair assessment?
Yeah.
It's no different with the land trust, right? So if you buy a home and try to sell it in 2 or 3 years, appreciation just isn't going to be your friend. The problem was when it was double digit, right? When you made in 2 years it jumped 30, 40, 50%. Now it's 0 to 6%. So that conversation is really no different. That look, if you're buying a home right now and you are trying to sell it within, say, a 5-year period, there's a likelihood you'll break even or you might have to bring cash to the table. Is that a fair statement?
Yeah, absolutely.
Comments are coming in for the panel. This for Tovah and Scott, and it's from J.R. Travis. I think that's on your page over there. What percentage of potential buyers are waiting or expecting an interest rate drop before they make a purchase?
I don't know, but if they're holding their breath, they're going to pass out. That's if that is what is preventing you from moving forward, you are not going to be a homeowner, and you will be a perpetual renter for the rest of your life.
I mean, I can't say I disagree. That's again, I've said it 1,000 times on my social media. Every time I talk to a buyer, or really anybody who is like, I'm waiting for rates to drop. If you're waiting for rates to drop, you're going to be waiting for a really long time, because the only times that we have seen the rates drop in the past, what would you say, 2 years, 3 years? Have been for very short
Such a
periods
short
of time.
window.
Short
Yeah.
window. So
And then what happened when that happened?
And then we bond by rent.
Well, if
We
you-
said, let's
yeah.
go, baby.
Well, that's not what I was thinking.
No, but
but,
he's
Sam-
right.
but,
He's right.
but he's not wrong.
if you
He's not
actually
wrong.
look-
He's not wrong.
If
But
you
sales
look-
jumped though.
Yes, if you look at why August of 2025 was probably as high as it was because that was a short window where the rates did start to drop.
Well, you're talking about last year.
Last year of 2025.
100%, yeah.
So there was more activity, more people jumped on, and they were ready to go because they were able to fit into that window. If you're not ready to go, you're going to end up missing that window.
So, talk to a fair amount of people. This is our business, right? I don't think I can get a clear answer from anybody why they don't want to pull the trigger. Everybody seems to be waiting for something.
It's because it's
It's
expensive.
anxiety. It's anxiety.
It's expensive. I mean, get a contractor. What's the rate? I mean, if a good credit score, what are we at? Flirting with 7? 6.5 to 7?
6 probably after.
Depends.
I haven't seen what's being said right now. We seem to be hanging in there at 4 points on the 10-year. So 6.625, 6.75 in that range.
So we're knocking on the door of 7. And,
So-
and rates and values, while they're flattened or softened, they're still extremely expensive. And there's a lot of deferred maintenance on what you're buying.
Yeah.
And that's what we're about ready to get into. So I agree, I hear you. Then tell me why we're up 6.3% year over year in volume of sales. There's a 6.3% more people have bought in the same 8 months from last year to this year.
Because last year to the year prior was a little softer. 2025 was softer than 24.
I would agree with that.
People have digested, I said this earlier, the rate environment.
Agreed.
And we are in an area that we've seen continued and not just in this area, nationally, we have seen part of the inflation that exists outside of the supply dynamic is an income inflation that translates over to actual consumer good purchases. So people are being paid more, whether it feels like it or not, because of the stuff that they're spending the money on, but they're making a little bit more money. They're in a rate environment they've become accustomed to, and their ability to take action inside of certain windows has become greater. So we're seeing people who are willing to move forward. I think that we go back to what probably looks like a more seasonal real estate version with big spring markets, quieter parts of the year as people digest what's going on around them. We have things in front of us that are going to create more activity year over year. But I think right now, Kevin Warsh is speaking at Jackson Hole, and he's going to come out and say we haven't done enough to fight inflation. We may see a rate hike
I think so.
into the third quarter. I don't know how adversely that affects what we do if it happens once. We get into the winter, maybe we put this Iran situation to bed in some format. We're back to, we're doing about 2/3 of oil transport that we were doing prior to March 27th. So that's why we haven't seen super high spikes in the oil market itself. There's not a doomsday scenario here. There's just kind of like this stale, like,
Quicksand.
yeah, like we're not really going anywhere. So we're not growing. I don't want to say stagflation, but there's a consumer sentiment feeling that has an uneasiness that people don't know where things are headed. So with that uneasiness, it makes them more hesitant to act overall.
100%. Well said. So well said. It's consumer fatigue or hangover. And to answer your question, why we're up 6.3%, population increase for the area is something that needs to be highlighted. We're uptick in population, and anyone that's got any kind of positions in stocks and equities is knocking on the door of all-time wealth for their households.
So the real answer, in my opinion, to that is the who. Who's buying? Who's selling? That's why that's uptick is going. It sure as heck isn't the first time buyer. It sure as heck isn't somebody in the 20s and the 30s. There are people in that mix, but the who that are buying is me, right? I've got, we're dropped a little bit in our marketplace. We were roughly 1/3% of cash. We're now hovering somewhere around 25, 26%. So the cash impact is starting to decrease a little bit on it, but it's the who that is buying, and there's just isn't enough. Who is selling and who is buying? And when you're not seeing this younger Gen Zs and millennials, they're out there, but they're not buying in the volumes that I was buying at that age. It's becoming a unique dynamic on it.
Well, when the
and your
average
square
home
meters, so-
buyer is my age.
Say that again now?
When your first time home buyer is in their
40,
40s.
40 years old.
And you're someone coming out of college, and unless you're in some sort of specialty niche, you're not getting hired right now.
You're saddled with that.
Way too much student debt.
You know, because
Well, that's because everybody said go out and get into debt and get a college education. Nobody said go out and be a plumber.
Well,
But go ahead. That's just
sure.
my-
And I
my
mean,
2 cents.
we've banged on that for
100 years.
yeah. But that's going to continue to be burdensome.
Yeah.
So specialize. If you've got somebody who's got kids or grandkids who's watching, or you're unemployed watching the show right now, but that's like figure out
What did
something.
he just say? My hearing aid didn't pick up.
Specialize.
No, not that part. The part that made her laugh.
You're unemployed watching the show right now. I mean, he's giving good advice. He's being very straightforward, but he's giving good advice.
So I asked this question of Scott yesterday, and maybe you can help out a little bit on the back end. When you take a look at all your transactions over a period of time, what does your typical buyer look like? What's their demographic? Not race or anything, but their age, right? Their income. Are you seeing in your buyer profile something similar to what Scott's talking about, the 40 years old? I think
yeah.
I think in April that number's going to jump to 42, by the way. I think that number's going to jump up even more when they rerun the numbers from NAR in April.
Yeah, I think a lot of the people that we are seeing are not, I mean, I'm trying to think if most of them have been first-time home buyers at that age, or they owned a home and maybe sold it and have been renting for 10 years.
So let's talk about that for a second.
Mm-hmm.
If I do that more than 3 years, what am I now?
You're still a first-time home buyer.
I'm a first-time home buyer. A lot of people don't know that. I can be the tender age of 60-something years old. I won't fill the other number in on it. Rent for 3 years. Guess what I am? I'm a first-time home buyer.
Mm-hmm.
So saying that, there's a lot of people out there. That's the reason why this 40-year thing is a little goofy for me, right?
Right.
Because the way they put it into a box, right? So if there's a lot of me's out there, I've sold my house, I'm retired, I put a substantial amount of money in the bank, I can't find what I want, I'm going to these upper-end luxury apartments that are getting built in Lake Monticello, Charlottesville, which we have a lot of people of, and I'm sitting tight for a few years. I've got 3 clients that are literally that. They've sold that. Hey, I'm going to rent for a while. I got enough cash put aside. I'm going to wait for the perfect house to come by. But after their 3rd year, they can apply for first-time home buyer. A lot of people don't know that, and I think that's skewing that 40 years.
I would be curious to see if that is what is skewing that number. I'm not sure if it would or if it is or not.
Well, I've asked that very question of NAR, and they have not returned my texts, emails, phone calls.
Nobody knows.
Geez, I
Nobody
wonder
knows.
why.
There is between now and the end of 2027, 3,000
Yep.
that I know of, luxury build-to-rent units coming on the market. 3,000
Yep.
between now and the end of 2027. That's an insane amount of build-to-rent luxury units that are coming on the market.
Yeah.
Well, that would fit the inventory demand of putting 5,000, $100,000 plus a year jobs, and it will gobble up a big bulk of
The buyer pool.
not just their buyer pool,
inventory.
but their purchase ability because of what they're going to be paying given their income. And why can't I qualify, or why can't I do this for a home? Because you're paying 40% of your income into a luxury apartment. I thought there for a second that you were trying to start a riot on the Lake Monticello community pages by saying that more apartments are going out there, but
Sure, I can do that. More apartments.
Where would they go?
They're not. But yeah, so thank you for catching me on that. Was a slip. But you guys are not wrong. But look, we're kind of talking about the negative side of things a little bit at this point. Tovah, I'd like you kind of bring it back.
I'm curious to see where she's going to go.
Bring
with
it
this here.
bring it a little bit
Curious to where you're gonna
more
go.
positive, because from a business perspective,
If there's positive for their standpoint, is there's it seems the percentage that are cash deals is going down.
Do you want to know? Here's something positive. First-time home buyers. Here's what that blueprint looks like. You are 25 to 28 years old. You are married or in some sort of relationship with a human being who is making also $80,000. So you guys have a combined income, however you get there, of a little over household of $160,000. You've got $10,000 to $20,000 saved, and you're making a down payment of 0 to 3.5%, 5%.
What can they buy?
And you're buying a $300,000 to $350,000 home somewhere just in the slightly more rural area. You're seeing those properties develop in Lake Monticello again, Twin Lakes and Green, in parts of Culpeper, in your surrounding areas. And you're going to get in that house and you're going to be there from age 25 to 35 or 28 to 38, and you're going to outgrow it in the size of your family, or you guys are going to get divorced and you're going to have to figure out how to sell the house and split the proceeds. But that gets you some equity built, and gets you to the next step. Now, is that for everybody? No, but that's what I think that the most successful, youngest people we are seeing, unless you're an individual making $160,000 and looking to execute that same type of plan, that's your blueprint.
So yes, and Tovah, please jump in. Otherwise, he and I just will do this for another 45 minutes. I was on the phone. Today's buyer gets that and understands that, because usually if you're making 170 grand, you have some, you kind of get that. They just don't want to, right? They just don't want to get into that market because of the belief. I was on or they're so comfortable where they are, they want to know. I was on the phone yesterday with a cop, Albemarle County cop, and a nurse. They're making 170 grand a year. They say, help us, we're looking for something. I said, great, not a problem. Oh, I want to be walking distance to downtown mall, right? I want to, their wants were so here that I said, look, I get you, but you're in the 350 range, and we need to look at Lake Monticello and Greene County. No, I don't want to do it. I want to be able to walk that. So the point is that 170, they're really looking at a $600,000 to $800,000 piece of property is what they're really looking at, and they can't go there at 170.
170 can get them to 600.
They won't do it. They won't do it. They will not do it because they want a yard. They want a picket fence, right? That their wants, their needs are so high that it's going to take that 2 years to get them down to a realistic.
Can you blame? Just throw this out there. Can you blame a nurse and a police officer for not wanting to live 30-minute drive from the epicenter of employment?
Well, he can't, and she can't.
Just the mileage alone at $4. I mean, how much did it cost? Did you drive the truck or the car today?
The van.
The van.
Yeah, I mean, how much did you drop in gas to come do the show? All right, it doesn't matter for you guys. You guys are doing well. Was that 3 gallons? Is it
I mean,
I don't know.
two
Well,
and a half
there's a
gallons?
reason
I
I
don't
would-
ever think of gas like that. I just conceivably cannot.
That's how I think. Yeah. Why? Because it would demoralize you? Because it would be frustrating?
It's a business expense.
I have to go it's not a matter of whether I want to go somewhere or what I'm doing. Like, I'm going to pay,
Doing business.
I can't adjust gas prices into my anxiety of life.
So the reason I was late this morning, Yonna and I, whenever we can, always try to drive in, right? So I dropped off Yonna at the office because she had some meetings at the office, and then I came in. Instead of being here at 10 o'clock, I was here a little bit after 10. That's the reason I was late. But we have been doing, and I'm going to work this into this marriage thing here in a minute, right? We've been doing that, decades, right? We always plan our schedule. We always try to do it together, mainly because it gives us an opportunity for Mrs. Smith to talk to Mr. Smith and give me my to-do list on the way in. It's a great opportunity to have for the coming into Route 53 to have a serious business discussion on what we're doing for the day and so forth and so on. You're smiling. You want to jump in? No?
No, this is our business meeting right here.
Look, the fact that what did I say to you when I talked to you yesterday about sharing the topic with Tovah?
I said she's fine with it. Yeah. Yeah.
How did you do? How do you feel about that? This is our therapy session, by the way. How did we feel about that?
I mean, where do you want to go, Keith? I'm an open book.
I know you were an open book. So let's try to. What makes the fact that you were married and working together successfully work? What makes that work?
That's for you? Or
I said
Doesn't matter. You guys chime in. What makes it work?
I think that structurally, like,
personalities are
Yeah.
is a big key. You
No.
cannot.
I know my role.
But you guys are not the same people, not the same personalities, right?
That's what I'm saying. I know my role. My role is one thing, and
Wouldn't it be
hers is
boring if you were both the same?
I don't know that would work.
That would not work.
For us, it was not working in the same office. My wife and I, when we were working in the same office next to each other, close proximity,
Yeah.
it was more challenging. When it was like now with like technology and phones and computers, you can work from anywhere. You know, it doesn't have to necessarily be right there.
I feel like we do better in the same when we're in the same office.
Oh, explain that. Because Jerry and Yonna and I and Jerry and Lauren are the same thing. If we are in the same, next to each other, because I do things extremely different than Yonna does.
So I talk to people all day long. It's a lot of what I do. And her being able to hear some of the conversations I have prevents me from forgetting to put a note to something. So mentally she can clock whatever I am, I said to John Doe down the road versus going, hey, I saw this in John Doe's file. It's like, oh, yeah, totally meant to tell you that. So it's just like a backup to when we're working and having those
So
conversations.
I have now on my phone an AI app that when I have these conversations, it translates it into notes and dumps it into a note file on it so I can go back. But
Do you notify the recording is happening?
no.
Just out of curiosity.
No, I don't necessarily think I need to. This
No,
is more.
Not in Virginia.
This is
But
just
Some
a-
states you do.
This is just notes for me.
Yeah.
Right, for my
And
conversation.
in some states, you do notify, have to
Yeah, yeah,
notify.
yeah.
But
This
Virginia is
this
a one-party consent.
One-party consent.
Yeah.
Well, this is not that kind of. If I've been around in politics long enough that if we're going to be having that kind of conversation, I say, look, we're recording. But I'm having a conversation with a client. I have a real bad case of ADD, right? And I'll forget the conversation, so we go into. So I don't have Yonna to jot notes down. So it's a little tool that works. So how do you feel about that?
I'm still young and sprightly, so I just remember things.
Pardon? Did you say you're still young and you can remember that? Is that what you said?
I said young.
So
and
hold it.
sprightly.
You're making in front of the disabled vet over here that's old. Is that
No,
what you're
I'm
doing?
making fun of
Oh,
him.
okay. Got it.
Yonna's-
Well, he's a disabled vet too.
Yona's watching the program.
Oh, there you go. She must be done with her meeting.
She
There you
says, allow space to be creative and respect each other's opinion and learn to listen.
Yes.
Man, that's something
Learn to listen.
that is, I will say this publicly, that is a 40-year struggle for me, is listening. It is hard. Really, really hard. And I got to tell you, doing this show has helped me improve that. Maybe not so much. I think he might disagree with that.
Do a
But
great job.
listening is so hard to go ahead and do it.
This comment's come in for the feed. Has the fall market started yet with kids back in school?
I don't think so.
Yeah.
I think we're 2 weeks away from that.
Yeah.
I agree to that same date. The only reason I do that is I do a 7 days, week over week market monitor. Looked as this very moment, 92 are on the market and 86 are sold.
It's not just that. It is hard to feel like the fall when it's 100 degrees outside.
Yeah, 100%.
People haven't, the football season, there's a little shift that you're going to get in about 2 or 3 weeks, and it's going to be.
Mindset's gonna
It's
change.
mindset. It's
Yeah,
about,
100%.
it's outside of just real estate. You'll see just a kind of overall, everything is going to take a little bit of a turn, better, worse, better, whatever, in about 2.5 weeks.
So working together, the biggest struggle Yonna and I have, and we talked about this on the listening side, and it took us a lot of time and a little bit of therapy to go through that, is for me not to want to fix everything, right? As a guy, I just want to fix things, right? And sometimes I just need to listen, which is so bleeping hard, right? So that has been my biggest struggle.
You know what you should do about that, right?
Shut my hearing aids off. No?
No, the joke is like whatever you're telling me something, and I'm working on fixing your problem instead of hearing you out. So the response you always give is, you know what you should do about that, right? So.
Yeah. And then we've got a whole language barrier thing, right? A cultural and language barrier thing where as a New Yorker, I kind of do things very differently, and I'll hear, well, I could do this. Okay, I'm sorry. So that's the biggest that's the biggest struggle of me wanting to fix it and do it, and maybe I'm getting better, but we shall.
How about this comment? Is there a financing product type
So he
or
wants to get
a
off
line
of
of financing that is upticking for Scott and Tovah's business? And I'll add this. Obviously, we're not in a refinance environment here. Is it new construction that's upticking here, or is it all pretty much the same? How's the book of business look?
We don't do a ton of new construction. We do a lot of resale.
I don't know that there's any one thing that maybe more non-QM, more bank statement loans, more for business owners looking for creative solutions. That's probably what we've seen more growth in over the last 6 months, 6 to 12 months even, is for people who are earning, but then they don't maybe show the government all of what they're earning, and just coming up with creative ways to help them buy. Now these people are earners. We're finding more success with non-QM on higher income price points than with, say, lower income price points. I don't know if that's not to shade the lower demographic, but one that's going to be a continued pain point is for the entry point buyer. I think your entry point buyer is going to continue to look more like that dual income, willing to drive a little further as a purchaser, and your more selective options are going to be people who are going to be business owners of some capacity, who may not qualify for conventional financing and need another solution.
Good answer.
I want to toss something in, and thanks, Jerry, for getting my brain moving. Something that we are seeing, and I've got about 4 people having this conversation on a listing side, and I'd love you guys to take a little bit of dive into this, is the the thought of people recasting loans. So,
is there something going on TikTok right now? What? I swear to God, I have heard the term recast
At least a dozen times.
in the last 2 weeks.
Yes.
And I was in my house project that I'm getting closer and closer to being moved into.
if your marriage can survive a renovation, you're in good shape.
This is round 2. This is
The
renovation
second
2.
renovation.
So one of the HVAC guys is on the phone with like one of the other HVAC guys, and I hear from the basement him like, I was looking at recasting my mortgage, but then it just resets the term. I'm like, that's not how that works. He's like, oh, I forgot. The guy's upstairs. I'll go talk to the guy. I got a call from a buddy of mine's dad talking about recasting the mortgage on a property that I think the son owns at like a 2% rate. I'm like, why are you going? That's like free money.
Yep.
Why are we gonna like just either overpay it or go invest it in something that's going to make you 7 to 10%?
Give me a high five. Appreciate the emotion.
This is two.
I appreciate the emotion.
This is two. I've had people reach out to me in Messenger about it. Like, where is all this recast stuff coming from?
Got it. So it's in the marketplace. However it's gotten in the marketplace, it's in the marketplace. So Tovah, do me a favor. Tell people what a recast loan, what this is about, please. In
So
your
a
beautiful and
recast loan.
kind words that you use.
So a recast loan is basically you're putting a lump sum towards your current mortgage and you're re-amortizing the new loan balance. So let's say you've got $300,000 left in the loan and you come into an inheritance of $200,000. You can put all of that $200,000 towards your loan and re-amortize it for the remaining term and lower your monthly payment.
Yeah.
That's essentially.
So and it's usually a minor fee,
Yes.
$1,000, something like that. So why are these 4 sellers? I know why, because we had the conversation, but why are these 4 sellers talking to me about, I'm going to put my house on the market, I'm going to sell it, I'm going to go buy something, right, during that sales process, because they have the financial ability to do that, right? And then when I sell house A, because house A now is taking more than 5 seconds to sell, I'm gonna dump $200,000 or whatever it is into house B and recast it. Why are these sellers thinking like that?
Because
right
they've
now?
got a bad financial advisor.
Yeah. Why would you recast your loan when you can take the $250,000 and drop it into index funds at 8%?
Most people
no
are not
risk.
thinking that way. Most people are not thinking that way. They want to think of their monthly expenses. That is what people are like tunnel vision when it comes to what their monthly expenses are, not long
So
term.
these 2 gentlemen, I sure do appreciate it, but 98%, and I've made that number up, 98% of buyers care about monthly payment.
Oh, yeah.
That's what it's all about. How much monthly payment it is. There's another thing they could do. They could take that $500,000 or $200,000, dump it into another thing, but they're going to keep that higher interest rate, that higher monthly payment, and they can go ahead and dump $500 a month into principal and cut their 30-year mortgage down to 15, right? And do it that way.
But $250,000 and an 8% return, and just basically.
But Jerry, I love you.
And you park it and leave
Nobody's
it
thinking
is
that way.
20
But they
grand.
Nobody's
don't.
thinking that way.
But the typical, I love you, but the
Yeah.
typical buyer.
And that's why we have a wealth gap.
The typical buyer will not think that way. The typical buyer, and these are sophisticated folks. These are not unsophisticated sellers. When you explain that to them, I said, look, I did spreadsheets. I said, look, if you do this, right? But if you take this and do this here, this is what it is. Or if you go ahead and, go towards by 1 less my latte factor and your years cut back, instead of having a loan for 30 years, you have a loan for 15 years, and look what you save on your interest and all that stuff. It is inevitably, I just don't want that monthly payment.
Here's the only way that it makes sense to me. And this is if somebody who wants to literally, and I don't want, I'll have these conversations, but that wants to grind down every last cent. Then let's say this person wants to put down 10% on the original because the 10% pricing price is slightly better. They want to save, this is to save, mind you, at a $700,000 loan amount for the people who might be doing this, this is going to save you $3,000 to $5,000. If $3,000 to $5,000 is the goal in savings, here's how you do it. You put down 10%, you get 50 basis points or maybe a little bit better in pricing. So at a $700,000 loan amount, that's going to be $3,500-ish, and you're going to take whatever that better rate is at 50 bips better for 10% down, and you close on the loan. And then you take the remaining, say, 15% and you recast. And the reason that I say 15% is because to remove your mortgage insurance inside of the first 36 months with most of these companies, you have to be at a 75% LTV, not an 80% LTV. So you put the 15% down then, get the property probably appraised again, even though you just had that done, and you have the MI removed, and you saved yourself around $300 to $3,500 in
Scott?
total savings. That's what you do.
There you go. That makes perfect
Scott,
sense to me. I mean, that's the only way I would consider.
Hold on a second. Let me get this out. Scott, you're an effing genius. Jerry, you're an effing genius.
I mean, I don't think that's even
Tovah,
being
what
a
do people
genius.
care about?
People care about what level of stress they can handle. They don't care about the numbers.
But
They
even
are
if you were-
focused, but they're not thinking about that. People who do not handle money do not think about money the same way that we do because they're not in it on a day-to-day basis. They're not constantly doing the math and comparing the apples to apples. They are thinking, what is my monthly expense? What do I need to do X, Y, and Z and to live comfortably? They aren't thinking about 10 years down the road. They're literally thinking about what's
So
in
the
front
real-
of
I
them.
respect that, but if
So-
someone just did, say you get it.
But Jerry,
you
they-
recast a
I
loan
love it,
because
but
you
they're
get a
not-
lump sum of money. Is
When
that
you're
why
in-
you would
hold
consider
on, but
recasting?
No,
when
no.
you're in a level of stress, when you have the, like anxiety brain on, because buying a home is stressful. Thinking about that and all of your different options, it's stressful. So when you have this on, you're like, what is my least path of resistance? You're not listening to somebody being like, but if you did this, you could do this. They don't care. They want to do what is least path of resistance that makes their nervous system be like, all right, we're okay. We're fine. Like, this is a people business. This is not we're going to figure out. I mean, some people think that way and they're great, but most people, most of the population is just, what do I need to do to make my nervous system go from here to here?
Gotcha.
So I done a $400,000 loan comparison, right? If you're at $400,000 loan at 6.5%, your PI, forget about your TI, is roughly $2,500, right? If you end up putting $200,000 in that and recasting that, your monthly payment goes down to $1,200.
From and what was that?
25 to 1,200. It gets cut in half, and in
So
people, this is
$1,300
what-
a month savings. So what
Excuse
did it? Is it
$1,200 a month savings.
$1,200 a month times 12
I got it.
is $14,400. What was the nut? What was the nut?
400. It's a $400,000. What they did over is 200.
So 200. So 14,400. 200,000 times 0.08 is most conservative return ever in index funds.
And-
You're 2K
but-
more.
80% of people's wealth are in their property.
Is their
not
house. Yeah, I get that.
But hold on a second. But there's a second version of this. What if they just leave the loan alone, make the monthly payment, and dump $200,000 towards principal, right? Their mortgage then cuts down to 8 years. That 30 years drop down to 8 years. Or if there's a third version of it, is you recast, you put your 200 and you pay a couple $100 a month, and you can cut it down. The bottom line is, the reason this is popular right now and the reason why these 4 sellers are talking about it, because they want to buy. They know that they have come to the understanding, these 4 sellers, that they're paying 6.5%. That's it. They know they're going to do it. The sellers have now recognized 3% is never coming around. Oh, he's doing math. 6% is never going to come around again, right? So 3% is never going to come around.
I mean, we might not see 6% for a while.
But my takeaway is, I got 4 sellers that want to be in the market, that want to sell. I don't think recasting is in their best interest, personally. But if that's what they want to do, our job, and I'm talking to Tovah here, because our job is to help to get them there and explain it. But people live at, it's real simple. It's $2,500 a month versus $1,200 a month. That's as far as their view is ever going to go. And that's not meaning that these people have master's degrees. They are super intelligent people.
What's the master's degree in?
Then that means they have the capability to learn, and they maybe need to be explained a better way.
100% with Scott on this here.
So, hey, Tovah, one day maybe you and I will do a show. What do you think?
I appreciate his frankness.
Well,
I mean,
he's
I'm the same way. We might be
This
like
is why he's bad cop and I'm good cop.
over the top,
I am always
hard
the bad
frank,
cop.
but we're frank.
Why do I always have to be the bad guy? That's the other real marriage problem we've got in business. I'm always the bad cop, but I want to be the good cop.
Here's a
Everybody-
good question to close with at the
Let me get this out
11:21
if you don't
mark.
mind.
Yeah.
Everybody at this table is not wrong, right? You guys are right. but not many people think that way. And yes, you can educate them. The problem is you've got to get to a point where, okay, this is what this client wants and this is what we need to do, and we need to get this client to a place that they're happy, and you have to disclose, you have to let them know, hey, you know, there's other ways to do this, and let them make that decision on their own.
Why don't we close with this one here? Scott referenced earlier in the show that there could be a rate hike 1 and maybe 2 later in the year. Does Scott envision a market where rates go higher? If so, how much higher?
I mean, it depends on how much the market front runs. I think that we potentially get back into a 7% medium 30-year fixed. That seems like a likely scenario inside of the next 6 months.
I think if that's 2 rate hikes. I think if it's 1, the market's probably already built that in somewhat, and it's not going to affect rates
But
that significantly.
I also had to park like a mile away today because the parking garage was closed, and I got to run. I got to be somewhere in a little bit.
Absolutely.
What's up with that?
Absolutely. Such as downtown Charlotte. Yeah.
2 engineers, of the 4, 2 are engineers, 2 of them are school teachers.
Okay. Okay. Keith Smith, Scott Morris, Tovah Payne, Real Talk with Keith Smith. Their DMs and their emails and our phone numbers are everywhere on the internet. Very easy for us to reach, for you guys to reach anyone here. And we welcome that. I know Scott, Tovah, and Keith absolutely do. I'm kind of so-so on that. Judah Wickower is behind the camera, and this show is archived wherever you get your podcasting and social media content. So long, everybody.
Thanks, guys. That was fun.
Thank you.
So you think could get it?